Hello, good morning everyone. So today we will present on topic 6, which is the financial accounting system. So before we begin this presentation, let me first introduce myself. I am Yvonne and my group members are Nur Azima and Nur Emiriani. Okay, after completion of this chapter, you should be able to explain the features of financial accounting system, identify the government's chart of accounts, describe the process of accounting for receipt, explain the process of accounting for payment, describe and explain the vote book, record transactions in the vote book, and explain the process of accounting for petty cash. The last three will be explained by the next group. Without further ado, let me start my presentation. So, what are the objectives of financial accounting system? First, it produces relevant financial information about past and present transactions of government. It serves as basis for decision making for future operations. It serves as the control mechanisms for the receipts, disposition and utilization of government funds and properties. Next, it prepares the financial reports pertaining to the results of operations of various government agencies that are for dissemination to the public. It also creates the public accountability. Moving on, let us see what other features of government accounting system. So, number 1, it complies with the Constitution, statutory, and other legal requirements. For instance, the Treasury Instruction, which is known as TI, the Treasury Circular, known as TC, and Treasury Circular Letters. Number 2, it relates to budget classification. Examples of budget classification are supply expenditure and emoluments. Number 3, clearly identifies the objects and purposes for which funds have been received and expended. For example, tax revenue will be recorded under Object Code 60000 for the purpose of all tax revenue collected from personal tax and corporate tax. Salary and wages will be recorded under Object Code 11000 for the purpose to record the basic salary before tax and deduction of public service officers. Number 4, facilitate audit by external review authorities and readily furnish the information needed for effective audit. This is consistent with the audit and accountability processes. Auditing ensures that financial transactions are recorded according to the relevant procedures. This is evidenced through proper documentation and classification. Auditing also seeks to prove the existence of such evidence, ensures that payment is made as per budget, and finally avoids misuse and misappropriation of public funds. Number 5, it permits effective administrative control of funds and operations, program management, and internal audit and appraisal. Vote accounting is a relevant mechanism developed to ensure effective recording of public sector's activities. Specifically, a vote book records allocation of funds received, actual amount of spending, committed liabilities, as well as funds balance. Next, I will explain the accounting operations. As a non-profit organization, public sector accounting system is not expected to inform its profit and loss, but rather to disclose how public monies and public stores have been used for that purpose. So, there is a proper accounting for public monies and public stores, and in accordance with legal and statutory requirements. There is a detailed guidelines on the recording and accounting of public monies and public stores that is provided by TI and TC. Next, all books of accounts must be balanced monthly and balanced in the subsidiary ledger agreed with the respective control account, which is the TI 143. Whilst the method of keeping the accounts must be classified according to the approved estimates of revenue and expenditure for the year. Lastly, it ensures proper authorization of payment voucher. by using appropriate form of document, and the expenditure must be vouched and coded according to the codes of object of expenditure. That's all from me. Now I will pass the presentation to the next presenter. Thank you.
Hi, I am Razima. So today I will present on chart of accounts. Chart of account is a coded listing of the account contained in the general ledger of a particular public sector organization. The chart of account functions as the primary reference for the recording and accounting of expenditure and receipt of public monies and public stores. The objective of coding system is to facilitate organization to improve the transaction process. Next, Treasury Circular number 5/2004 highlights that code of expenditure and receipt is a 5-digit numbers for various objects of expenditure and receipt. The code of expenditure is numbered from 10,000 to 50,000, while code of receipt is numbered from 60,000 to 90,000. Those codes are divided into 4 levels, which I will explain on the next slide. All of the code of expenditure should be created upon the permission given by the Treasury or State Financial Authority as stated by Treasury Instruction 41. Thus, all government agencies will be using the same codes to record the expenditure and receipt of public monies and public stores. Okay, this is the level of coding. First, standard object. Standard object is the main group of expenditure and receipt. It is categorized into 5 groups of expenditure and 4 groups of receipt. Second, detail object. Detail object is the main category of expenditure and receipt listed under each of standard object. For example, salary and wages, traveling expenses, and cost of living, and others. Okay, next. Extension group object. Extension group object is division of expenditure and receipt listed under each of the O. The example of EGO are public officer salary, military salaries, and others. Okay, the final level is extension object. Extension object which represent all the subhead of expenditure and revenue in details under EGO. Example of EO are public officers basic salary, public officers salary in areas domestic accommodation of publics. All of the example of code of object of expenditure and receipt, you guys can refer textbook page 180.
Assalamualaikum and hi everyone. My name is Nur Emi Ariani Nabilah binti Haminuddin. Today I will present about accounting for receipts. Accounting for receipt is a receipt encompasses any income received or earned by the government. It can be tax revenues, non-tax revenues, non-revenue receipts, revenues from federal territories. It will be accounted on a cash basis and it will be comply with Treasury instruction. The detailed procedures for revenue collections are laid down in Treasury's instruction 60 to 91. This collection of revenue are under the responsibility of the controlling officer of public sector organization, particularly accounting for cash receipts. It has states on Treasury Instruction 53, where they have to make a proper collection to all the public monies received or receivable, and then they have to self custody the money collected, and they have to record in the accounts rendered. You guys can refer this to page 190. Next is accounting for cash receipts. Revenue received from the public may include cash, stamps, checks, legal tender, and foreign currency. Being the most common form of revenue received in various public sector organizations, this chapter therefore provides detailed discussion about the procedures to deal with cash receipts. This is the flowchart process for the accounting for cash receipts. There are 4 procedures to deal with cash receipts. First of all, issuance of receipts. There are 7 Treasury instructions. Firstly, TI3. It states that collector is an officer who is responsible for the collection of public monies. And then, TI-61 states that the collector also has the responsibility to notify the payer about their rights to demand for a receipt. And then, TI-60 states that an official receipt must be issued to the payer to acknowledge that money has been received. Furthermore, TI-70 states that segregation of duties in preparing a receipt. It is any receipt must be prepared by any officer and signed with a carbon copy by another officer who also received the money. And then an official receipt can also be printed out directly from the system as approved by the Accountant General. It's been it's been stated on TI-91. And if for any reason the receipt is spoiled, it must not be altered or destroyed. Instead, it must be cancelled and attached together with the carbon copies for audit purpose. It's been stated on TI-62. And last but not least, when receipt of acknowledgement issued from counterfoil books, a carbon copy must be prepared and signed by the responsible officer. That's for TI-63. Next is custody on unusual receipts. TI-65 is about responsibility on the safekeeping of the unusual receipts. And then TI-66A, 66B, and 66C is about receipt books, where TI-66A particularly, the collectors are expected to ensure all unused receipts, which is receipt books and license books, are securely locked up either under his own control or by a senior officer who is not involved in making collection and issuing receipts. TI-66C is about book of receipts should be issued in a numerical sequence. And for TI-66B is about any defective books should be returned to the government printers. And last but not least, TI-68 is about book security lockup. The third one is recording of collection. You guys can refer to page 192. TI-72 is about recording of receipts, where all receipts must be recorded individually into the cash book at the time the transaction occurs or before the end of the day. And then TI-73 is about segregation of duties between cashier and other officer or accountant general. And then TI-74 is about difference in the record must be informed in writing. It is when in the case of any differences between the amount collected and the amount due, the officer in charge must inform the collector in writing. And then TI-75 is about miscellaneous receipts reported to head department, where any surplus found in balancing the books with the actual cash received, it must be credited to the government revenue under miscellaneous receipts, and this matter must be reported to the head of department. Lastly, lodgement of collection. All monies received that have reached the approved amount must be lodged into the bank in accordance with the specific revenue code. TI 78A and 78B is about approved amount to be lodged into the bank. TI 78A indicates that the maximum approved amount is when the cash exceeds 500 ringgit or the total collection exceeds 2000 ringgit. The total collection is including checks, postal order, and money order. And then for 78B is about any smaller amount collected that has met the last working day of the month must also be lodged into the bank. And then TI 79A is a bank-in slip must be prepared when collections are lodged into the bank. And TI 79C is about forwarding of the bank slip to the appropriate treasury at the end of each month or shorter intervals as prescribed by the Accountant General. TI 79B is about The total lodgement for the day will be recorded in the cash book on the day of the lodgement. And then PI790 is about attachment with the banking slip, where every amount paid or banking slip forwarded to the treasury must be accompanied by the collector statement and acknowledged by an official receipt. However, in most circumstances, banking slip is forwarded to accounting office. And then TI-79F states that in the case of no collection made in any specific accounting period, a nil statement shall then be submitted. And then TI-85 is about no public monies can be used either as an advance or as a loan between the time of receipt and the time of lodgement into the bank. Next one is accounting for other form of receipts. There will be 4 treasury instructions. The first one is Treasury Instruction 64, which is about revenue collected in form of stamps. Stamps mean adhesive, and stamps should be affixed by a person paying in such revenue and must be cancelled by the authorized officer. You guys can refer this to page 193. The I-71 is about revenue received by mail. It is when an officer receives a mail of revenue or of valuable documents. It must be recorded and registered, such as date received, name of sender, register package number, check number, amount, and description of document. Those revenues are then handed over to the cashier, who will initial the record and register. The receipt will be issued on the same day and recorded in the register book. The I-76 is about revenue received in the form of checks. All checks must be crossed, not negotiable, and made payable to the appropriate department or the accountant general or the state accountant, which is state treasury. Check number and amount of each check must be shown on the receipt. And last but not least is the I-77, where about revenue received in the form of legal tender in foreign currency. Revenue received in the form of legal tender in foreign currency should be sent to the local treasury or sub-treasury. Lastly is about other issue in relation with the receipt discussed in the treasury instruction, where Treasury Instruction 80 is about collector failed to account their collection, and then Treasury Instruction 81 is about receipt of officer who are not a collector, and then Treasury Instruction 87 and 88 is about refunds of revenue, and then Treasury Instruction 89 is about returns of arrears of revenue. And lastly, Treasury Instruction 90, where it is about failure of accounting officer for some receivable to be reported. And that's all from me.
Hi, it's me again, Atsima. So I would like to continue my presentation on accounting for payment. Any outflow of money is considered as an expenditure or payment to the government. An expenditure or payment from a public sector perspective includes the payment for acquiring fixed assets, payment for supplies and services, and payment of emolument. Treasury Instruction number 92 to 110 governs the payment system of government agency, which includes how and when to record the payment as well as the monitoring and controlling of the allocated funds. The objective of Treasury Instruction is include the following, which is to upgrade the quality of cash management, improve central and branch government agency, and improve government agency payment systems. Okay, standard codes are used to ensure government's payment system is controlled and approved before any payment could be made. Treasury Instruction 54 highlights that a controlling officer is expected to control the expenditure provided for the head of estimates under his control. According to Treasury Circular number 5/2004, there are 5 types of payments, namely emoluments, services and supplies, assets, gift and fixed charge, and other expenditure. However, in this chapter, we only discuss payment for purchases, in example, services and supplies. Next, self-accounting department and non-self-accounting departments. Self-accounting departments are responsible to process their own payment voucher as well as for bulk payment. For non-self-accounting department, they do not process their own payment, and all the payment voucher and bulk payment are handled by the Accountant General Department. Payment for purchases, service and supplies. The procedure for payment began when the authorized officer from the purchasing department prepares a local order to the suppliers. On receipt of goods, the document of delivery order and invoice or report will then be submitted to the finance department for payment. Treasury Instruction 93 states the condition that the respective accounting officer need to give focus upon which receipt or report is received from the purchasing department. They should ensure that the payment will not cause an excess on the amount provided for the subhead to which it is chargeable. Second, the authorized officer certifies that the payment charges are in the order. Third, any repayment of advance or other liability have been duly deducted from the amount of payment. So, these are the procedure of accounting for payment of purchases for service and supplies. The process flow chart and the explanation of the procedure you guys can refer to textbook page 124. Last but not least are the issues relating to the accounting for payment. First, payment for traveling expenses, Treasury Instruction 100, and payment for salary in Treasury Instruction 105.